Hello, everyone, and welcome to a new edition of Merrill's Monday Morning Market Madness, coming at you with an update of what's going on in the Phoenix residential housing market. In particular, today, we're going to take a look at the rental market. We don't typically spend a ton of time talking about the rental market, but I want to dive into some of those numbers. But first, as always, we're going to start by taking a look at the month's supply of inventory numbers, essentially how many homes are currently for sale versus how many homes are selling, to give us a sense of the supply versus demand. So right now in our MLS, we have 6,653 active listings. Last Monday, there were 6,507. So we're up 150 active listings over the past week, meaning that 150 more homes have come on the market than what has sold. So inventory continues to increase, which is making the market slightly less competitive. But at that pace, let's say we add 150 listings a week, every single week, we could add that for a year, 150 more listings for a year and still be in a pretty strong seller's market. So it is moving in a more balanced direction, but we still have a very long way to go. There are 11,638 homes currently pending. Only 8,602 have closed in the past 30 days. So that number is a little bit lower. So the number of homes closing over a 30-day period is falling, and the number of homes coming on the market is rising. And then lastly, the month's supply of inventory is 0.77, which is also the highest number that we have seen. So again, a balanced market would probably have a month's supply of inventory around 4 to 5 months supply. So we're still at 0.77, but we were as low as 0.48 or something like that. So it's moving towards more balance, which I think, unless you're I think everyone wants a little bit more balance. Even homeowners like to know that it's just not, the values are still going up and all of that, but it's not an absolute frenzy, because people feel like a frenzy isn't sustainable. So we'll continue to keep an eye on it and see where it goes. And obviously I'll continue to bring you these numbers and try to be as transparent and open and upfront with you about what the market is doing and what direction we think it is going to head in. We're still seeing multiple offers on most homes, though. So like yesterday, as an example, I was out showing homes to a client in Gilbert area around 450,000-ish. And all 6 homes that we showed had multiple offers, and all 6 of them had multiple offers above list price. So I really don't want to paint a picture of like, oh, the market's totally, no, it's still crazy. But instead of 20 offers on every home, there's 3 or 4 offers on most homes. So in fact, I took a look of the homes that have sold in the past 30 days. The sold to list price ratio is still 103%, meaning that on average, sellers are getting 3% above the list price, which is pretty significant when you consider that the average sales price is now over, it's around 500,000 for our MLS. So on average, sellers are getting an extra $15,000 above what they are asking. Average rates dropped slightly last week. Average mortgage rates are at 2.88%. So rates are still staying very low, which is helping with affordability, and that will continue to help with, the buyer side and adding demand. I've always said that if there's going to be one thing that would really trigger a massive slowdown in our market, it would be rapidly rising interest rates. If rates rose tomorrow up to 4 or 5%, suddenly affordability becomes an even bigger factor than it is now, which obviously affordability is already becoming a big factor. It's getting very, very difficult for first-time home buyers, especially in Maricopa County. If you want to look a little farther out into Pinal County, and even like Maricopa and Santan Valley are quite pricey. We're seeing more and more first-time home buyers going to places like Florence, Coolidge, Casa Grande, and places like that. So prices out there are Casa Grande, with Lucid and everything. It just feels like it is exploding out there. So anyway, as promised, let's jump into the rental market. So what I wanted to look at is what have average rents done over the past decade? And in order to make sure that I'm comparing, trying to keep the numbers as fair as possible, I decided, let's look at what a typical rental rented for over the past 10 years. So what I'm looking at is it's a single family home built after 1980, single story, 3 to 4 bedroom, 2 to 3 bathroom, between 1,200 and 1,800 square feet, not in a 55 plus community, no pool. So just kind of looking at, some of those, just a very normal, typical, regular single family house. In 2011, the average rent for a home like that was $999. Man, don't you wish you could go back and rent one of those or buy a bunch of them? Then by 2012, it became $1,031. So average rents only rose by $32. Then the next year was $1,023. So again, rents went up about $20. Then to 2014, it was $1,053. So rents went up another $30 a month. Then by 2015, it became $1,125. So between 2011 and 2015, average rents went up by $126 over a 5-year period. So not a horribly high amount. I mean, no one wants to pay more, but that's pretty doable. Then the next year it went up $80 a month to $1,209, and another $80 to $1,292. Then another $80 in 2018 to $1,373. So you see, we had this pattern where they were going up $20 to $30 a month each year. Then all of a sudden it started going up $80 a month each year. And then in 2019, it went up $120, the average rent from $1,373 in 2018 to $1,496. So it was about $1,500 was the average rent. And by the way, sorry, one more. This is for all of Maricopa and Pinal County. So if these numbers seem a little low, keep in mind that this includes Coolidge, Florence, Arizona City, Eloy, some of these outskirts where the rents are a little bit cheaper. So I included all of Maricopa and Pinal County. By 2020, average rents increased by, $130. It went all the way up to $1,616 a month. And then so far in 2021, the average rent is $1,838 a month, which is an increase of $222 a month just compared to last year. And by the way, that's just so far this year. By the end of the year, that will be up. It might hit 1,900. Rents are absolutely skyrocketing. Many tenants, if you're renting, you already know your rent has increased by, if you've had to sign a new lease, your rent has maybe gone up to $300-400 a month. So rents are absolutely skyrocketing. Put this another way, in all of Chandler and Gilbert in the MLS, there are currently only 3 homes for rent below $2,000 a month. And the cheapest one is $1,900 a month. So rents are absolutely skyrocketing, and will continue to skyrocket because they're having the same supply and demand problem that the sales market is having. So what does that mean? Well, if you're a renter, it means that it's still more affordable to buy than it is to rent. So if you were able to buy, let's talk about it and see if we can get you into a home. I know it seems like prices are high on the sales market, but tell you what, they're nothing compared to what the rent prices are and what they're going to continue to do. The best part about buying a house is you get to lock it in. No more raising rent, right? You get that 30-year mortgage, and now your payment on it is fixed. The only thing that can fluctuate slightly is the property taxes and insurance. And they're certainly not going to almost double. From 2011 to 2021, we've seen almost double average rents, in just 10 years. So can you afford for your rent to double over the next 10 years? I think that would be a thing to look at. And if you're not a renter, have you considered investing? Because rents are fantastic right now. They're rising. Demand is insanely high. You're not going to be dealing with a lot of vacancy for the most part. As long as you're pricing your properties correctly, they are all going to get rented out and moved in very fast. And we've been having great experiences with all of our rental properties, and I'd love to connect with you and see if I can help you pick up a rental or 2 or 3 or however many you feel like you need. But it's an incredible thing to have in your portfolio right now. Real estate prices are rising rapidly, rents are rising rapidly, so you're getting an incredible return. So anyway, that is it for this week's show. I hope you found this information helpful. If you would like more details, or if you have any questions about anything I talked about today, please feel free to hit me up. Thanks so much and have a great day.